All right, let's talk tips. If you have any clients who earn them, servers, stylists, tour guides, you name it, you're going to want to pay close attention. IRS Notice 2025-69 just dropped, and it's a must-read for the 2025 tax year.
So here's the situation we're all facing. You've got this new deduction for qualified tips thanks to the One Big Beautiful Bill Act. That's Section 224. Sounds great, right? Well, here's the problem. The 2025 forms, specifically the W-2, they don't have the boxes we need to report this stuff. That leaves us with a major compliance gap, and of course it's on us to figure out how to handle it for our clients.
And that's exactly why this notice is so important. You can think of Notice 2025-69 as the official bridge the IRS has built for us for this, let's call it a transition year. It lays out the specific rules, the safe harbors, and the exact calculation methods we're supposed to use. This is our roadmap for confidently claiming this deduction in 2025.
Okay, so let's start with the dilemma itself. What's the core problem we're facing for the 2025 season?
Okay, first things first, let's get on the same page with the key term here, qualified tips. It's straight from the code. At its core, we're talking about cash tips for jobs that were customarily tipped before 2025. Now, there are limitations, which we'll get into, but that's the foundation.
All right, let's jump into the guidance, starting with the clients we see most often, tipped employees who get a Form W-2. The notice actually gives us a really clear multi-option approach here.
So, for 2025, how do we actually calculate this thing? The notice gives us a few ways in. You can start with the amount in Box 7 of the W-2. That's Social Security tips. Or you can use the total tips the employer reported to their employer on their Forms 4070. There's even a third option, an amount an employer might voluntarily put in Box 14. But here's the key part. No matter which of those starting points you use, you always add any unreported tips from Form 4137, line 4, on top of that.
You know, the best way to see how this works is to look at the examples from the notice. Let's start with a really simple one. Example 1.
So we have Anne, a server. Her W-2 for 2025 shows $18,000 in Box 7 for Social Security tips. Pretty standard. She doesn't have any other tips to report on a Form 4137, so for her, it's dead simple. She can use that $18,000 to figure out her deduction. Easy.
So the big practice point here is pretty clear. For most of your tipped employees, the ones who are nowhere near the Social Security wage base, Box 7 on the W-2 is going to be your go-to number. It's the simplest, most direct source for this calculation in 2025.
Okay, but what about our higher earning clients? The ones who blow past the wage base limit? This is where it gets a little more interesting. Let's look at example 2.
Okay, now this is a really important one. We've got Bob, a bartender. He actually reported $20,000 in tips on his Forms 4070 throughout the year. But his W-2 Box 7 only shows $15,000 because he hit the Social Security wage-based limit. So, the notice gives him, and by extension us, a choice. He can use the $15,000 from Box 7, or he can use the higher $20,000 from his Forms 4070. And then either way, he still gets to add that extra $4,000 of unreported tips from Form 4137 to his total.
And this right here is a massive practice point. For any of your tipped clients who are high earners, you can't just rely on the W-2 anymore, period. It's now part of our due diligence to ask for and get their Forms 4070, those monthly tip reports. We have to do it to maximize their deduction. I mean, for Bob, that's a $5,000 difference in the base amount. That's huge.
Okay, enough about employees for a minute. Let's pivot to our self-employed clients. For them, there's no W-2, so the big question is, how do they substantiate this thing?
And the rule is brutally simple. Substantiation is king. If tips are lumped into a 1099-K or a 1099 NEC, they're eligible if the client has the records to prove what portion was tips. And the notice is really specific about what counts. Daily tip logs, reports from a point-of-sale system, stuff from third-party settlement organizations. Basically, hard evidence.
Let's check out example 3 from the notice to see exactly how this works.
So here's Doug, a self-employed travel guide. He gets a 1099-K for $55,000. The problem is, it doesn't break out tips. It's just one big number. So that 1099 alone doesn't help him. But Doug was smart. He kept a detailed, contemporaneous log every day, and it shows that $7,000 of that total came from customer tips. And because he has that log, he can use that $7,000 to determine his qualified tips.
This brings us to maybe the most important piece of advice you can give your self-employed clients this year.
Tell them that keeping a detailed, contemporaneous tip log is no longer optional. It's not just a best practice anymore. It is an absolute requirement if they want to claim this deduction. No log, no deduction. It's that simple.
All right, let's talk about what might be the biggest news in this whole notice, at least for 2025. And that's the transition relief for specified service trades or businesses, or SSTBs.
And folks, this is a really big deal. Under the actual law, tips from an SSTB don't qualify for this deduction. But, and this is a huge but, for the 2025 tax year only, the IRS has decided to just pause that rule.
And I know you all remember the term SSTB from the whole Section 199 nightmare, right? We're talking about health, law, consulting, basically any business where the main asset is the reputation or skill of the people. Now think about your clients. How many hairstylists, personal trainers, performers, or consultants do you have that get tips? A lot of them are SSTBs. This one-year relief is huge because it means all of them can potentially qualify in 2025.
Okay, so let's boil this all down. What do you actually need to remember for your practice heading into the 2025 filing season?
First, documentation is everything. For your employees hitting the wage base, you have to get the Forms 4070. For your self-employed folks, demand those tip logs. They're not optional. Second, the SSTB rule is on hold for 2025. That's a huge door that's opened, but remember, it's just for 1 year. And third, don't go looking for new forms for 2025 because there aren't any. We have to do all this work using existing forms in the client's own records.
So that really just leaves one final question, and it's for you. Are your client organizers updated? Are your year-end checklists ready for this? Have you thought about how you're going to review payroll? The rules are out there now. It's on us to get our processes in line to make sure we don't miss this for a single client. Hope this explainer helped you get a handle on it.